Hello and welcome back to the Geordie Pig Investor channel, where we delve into the world of dividend investing to help you build a portfolio that pays you. Whether you're just starting out or looking to maximize your passive income, this channel is your go-to resource for strategies, insights, and the tools you need to grow your wealth steadily over time. Hit that subscribe button and join me as we explore how to make your money work for you one dividend at a time. In today's video, I'll be explaining why I think you should be seriously considering to add this UK wind farm giant to your portfolio if you're a fellow dividend-focused investor. What is Greencoat UK Wind? Stock ticker UKW. Greencoat UK Wind PLC is the leading listed infrastructure fund that's invested in UK wind farms. The company aims to provide investors with an annual dividend that increases in line with RPI inflation while preserving the capital value of its investment portfolio in the long term on a real basis through reinvestment of excess cash flow. By owning the stock, you are directly participating in the ownership of UK wind farms, which is increasing the resources and capital dedicated to the deployment of renewable energy and the reduction of greenhouse gas emissions. This means that you are not only owning a very good business, but one that is helping the planet you live on today. Specifically, it'll be in your country as well, as this firm are based solely in the United Kingdom. Ethically, this is a great company to own. If we have a look at the key stats to do with Greencoat UK Wind, you can see they are based in the United Kingdom, part of the utilities industry, have a market cap of 2.59 billion. They did go public in 2013 and actually have a dividend growth streak currently at 7 years, with a 5-year dividend growth rate at 9.68% and a huge dividend yield currently at 8.7%. And over the last 6 months, Greencoat UK Wind have performed very poorly, being down nearly 20%, as you can see from the graph on the screen right now. And in today's video, we're going to dive deeper into the company, see if there's any flaws within the company, or if it is actually a good buy, and the reasons behind why I do own it in my portfolio. Why is Greencoat UK Wind a good option? Well, the company is well established as the leader in the UK wind sector. Excitingly, this sector is projected to grow 2 to 3-fold over the next decade. Last year, we saw the election of a government that is committed to delivering a net zero electric grid by 2030, which means in the next 5 years, this has to be achieved. As one of the leading companies operating in the UK, they are well positioned to be part of this transformation, and if you own the stock, then you'll be benefiting massively from this. Something that's not looked at as much is the demand for green electrons. The continuing decarbonisation of transport and heating through electrocution, as well as green hydrogen production, will require a further 30 terawatt hours of green electrons per annum in 2030. This represents only 1/10 of the UK's current annual extraction demand and approximately 5 times the company's current annual electrical output, just highlighting further how much this company has the capacity to continue growing. Right now, Greencoat UK Wind provides renewable electricity for 2.3 million homes and avoids emissions of 2.5 million tonnes of CO2. Remember, as shown on the last slide, this company pays a massive current dividend yield of over 8% and wants to continue increasing this payment, and with the growth prospects over the next few years, I only see the company heading in one direction. On the right hand side, I've picked out a diagram from their recent earnings call where it breaks down quite nicely different parts of the portfolio. You can actually see from this how they have 55% onshore and 45% offshore, and how just under 50% is actually within England, and then they've got over 40% in Scotland, leaving just 10% for Northern Ireland and Wales. And it actually also shows the distribution of their assets and where they are all based. Furthermore, you can see from the map here all the different locations of the 49 different operating UK wind farms that they have, and it actually generates a capacity totaling 2007 megawatts per year as of the 30th of July 2024. And next up, we're going to have a closer look at Greencoat UK Wind's earnings call. On their recent earnings call, their portfolio generated 2,654 gigawatts per hour, But unfortunately, this was 15% below budget, which was quite disappointing to see, and it was down to low wind and low availability. The main low availability was from one of their main assets in Hornsea 1, but despite the lower budgeted output, net cash generated by the group and wind farm SPVs was 165 million, and underlying dividend coverage for this period was 1.5 times. The company also reinvested 44 million by buying back its own shares. So this 44 million ended up buying 39 million shares at a price of £1.39 per share, which was at a 14.2% discount to NAV. This is a great sign and shows that they are sticking to their word with their 100 million share buyback program that was announced in October 2023, having now bought back 53 million shares in total since starting this program. This means the company has returned a total of 82 million to shareholders since October 2023, as they have paid an additional 29 million in dividends in 2023, and that's on top of that 53 million that I just mentioned in share buybacks. This also shows that Greencoat maintain its disciplined approach to acquisitions and expect to not invest in future assets when it's considered to be more valuable to buy back shares or repaying debt. Basically, the company are really focusing on future opportunities that will benefit shareholders over the medium to long term. Some of the key stats are shown down below. Next up, we are going to have a look at Greencoat UK Wind's intrinsic value. Now, I just want to mention that a lot of people have requested this company and for me to do a stock analysis on them. So not only is it a stock that I'm a huge fan of, there's been a lot of subscribers asking for this one, so I do hope that you all enjoy the video. When valuing a stock and by combining the relative valuation with the DCF valuation, it will calculate something called the intrinsic value. The intrinsic value of a stock has been used for many years to calculate stocks and is easily calculated by simply adding the two valuations together and dividing by 2. Remember, Greencoat UK Wind's current price is £1.18. And when plugging in my numbers for the DCF valuation alongside the relative valuation, I got an intrinsic value for this stock at £1.47, which would be a 24.3% upside on that current price. I feel for my estimation that I did use fairly conservative estimations, so there could be much more upside potential, but also be aware that if the sector or company underperform, then it also could be a lot less than the intrinsic value that I came up with. Next up, we're going to have a look at what the NAV is and what it means for Greencoat UK Wind. NAV stands for net asset value, which is a measurement of the value of an investment fund's assets minus its liabilities. It essentially represents the value per share of the fund and is calculated by dividing the total value of the fund's assets by the total number of shares outstanding. In the case of Greencoat UK Wind, a renewable energy infrastructure fund, the NAV would reflect the total value of the wind farms it owns and operates, less any liabilities such as debt. The NAV helps investors understand what each share in the fund is worth based on the current value of its assets. As of December 31st, 2024, Greencoat UK Wind's net asset value was 3,409 million, equating to 151.2 pence per share. This does represent a decrease of 7.4 pence per share from the NAV of September 30th, 2024, and this was primarily due to a revision in energy yield estimates across the company's portfolio. Having said this though, with Greencoat UK Wind having a share price of 118.5 pence, it still means that they are at a discount of around 21.92%. On the diagram below, it kind of shows you a little bit more of an easier representation of how the NAV is worked out, but please bear in mind that the figures from this NAV are from back in June 2024, as that's the latest data that I could get a hold of for these figures. Next up, we're going to have a look at Greencoat UK Wind's Wall Street estimates. The Wall Street estimates are an average estimate of a public company's quarterly earnings and revenues that leads to a valuation of that particular company. Currently this year, there have been 13 analyst estimates for this company, and it looks very promising with there being 4 strong buys, 7 buys, and 2 holds, alongside no sells and no strong sells. Analysts have actually been bullish for the last couple of years with this company, maintaining a buy rating the entire time. On the worst case price, analysts believe that Greencoat UK Wind is worth £1.68, which would be a 42% upside on that current price. On the average case, they believe it would be worth £1.77, which is a 49% upside on that current price. And on the best case, analysts believe they would be worth £1.89, which is a massive 59% upside on that current price. What does this mean for Greencoat UK Wind? If you're a long-term dividend-focused investor, then Greencoat UK Wind could be a good buy at a discount NAV offering a stable income stream. Not only this, but the consistent dividend increase over the last 7 years are very promising and backs up and gives me confidence in what they say about continuing to increase the dividend at a rate of around 3.5% per year. Obviously right now, over the last 5 years, it's actually at closer to 10%, so that 3.5% should be easily maintainable. Couple this with their already brilliant 8.6% plus dividend yield with the quarterly payouts, and this company looks in good shape for a dividend investor. Furthermore, the huge dividend is paid tax-free to anyone who owns the stock within an ISA. But something you do need to consider is if interest rates do stay high, then the price recovery could be slow, so a short-term investor might prefer to wait for stabilization or invest elsewhere. Remember though, I'm all about long-term investing, and I think taking a step back and looking at the medium to long-term outlook and prospects of any company you are looking to buy is so important. As well, on the flip side of this, if interest rates continue to fall, then this sector could rebound, making UKW an even more attractive stock. Something I will be keeping an eye on is the political and regulatory risk in the UK energy sector, as this would impact the stock if anything were to change. Also, wind farm revenue depends on power prices, which can fluctuate, so bear that in mind if profits do seem to be affected. Having said all of this though, for me, this company is only going to get stronger in the coming years, especially with the government plans to be net zero electric by 2030. This company is placed in the perfect position to benefit from this and beyond. I'm a huge fan, especially with the stock being currently priced at under £1.20, and nearly all analysts are agreeing with me. Thanks for watching. If you're building a portfolio for passive income and financial freedom, then don't forget to like and subscribe and hit the bell notification so you never miss an update. Please share your thoughts on this stock in the comment section down below and let me know if you own it in your portfolio. Until next time, keep compounding and stay patient in the market because your future self will thank you. For now, this is the Geordie Pig Investor, over and out.